Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So here's we have minimum changes compared to the recent session, and price action stand different compared to forex market. In today's forex video we have talked about the cross market divergence, which is a bullish between the Great British Pound and Euro currency, but gold have some special moments compared to some nuances compared to the as a Great British Pound as Euro currency. Particularly speaking, gold stands right now below the major support, while as Great British Pound Euro currency still stands around support areas, gold stands below it, and market is not at the result. So theoretically, it has the free space here, which is makes risk of the drop a bit stronger than on the currencies. At the same time, all price performance in all markets will depend from the same factor. This is CPI report, and if we will get the upward action on the currencies, weakness on United States dollar, then the same performance we could get on gold market as well. So on lower time frames here, it's actually we have some divergence that's forming, but actually it is not something significant. It's just because market is already below the support. If we would have the divergence somewhere around the fib level, well, that might be a bit different song, but here I wouldn't rely on it too much. On the hourly chart, here is the performance that we talked about. So here's might be some hand and shoulders, something that sort if retracement will be more extended to the upside. But at this point, as you can see, that overall performance looks a bit heavy, and if we wouldn't have the CPI on horizon, I would say that probably it makes sense to consider taking the short position in the current situation. Because market definitely can't show any significant pullback. Not only CPI could intrude and bring some support and trigger upward action. At the same time, when the market already stands below the level, it is a bit curious that performance is not developing, so it mostly stands flat. I suggest that it's also because the CPI. It's nobody would like to take the additional risk and trying to take the directional positions before the major data will be released. Usually when the market already breaks the level, it shows this straightforward downward continuation. But here you can see that level has been broken, but price action stands flat. So market's not to hurry up with the developing of the success. As bears not the pushing price right now to the downside, because they do not want to be trapped in the wrong direction. Just imagine that you start taking massively the bearish positions and suddenly everything has changed and market return right back up. So it's not very pleasant moment. This is maybe the reason of bears to be so passive in the current situation. Whatever it will be, currently, guys, I think that's it means that currently probably we also should not take additional risk and to not hurry up with the taking the short position as well. So actually the things that we already talked about in the weekly report. So just let's see what will happen today and tomorrow. By the way, it's also will be important statistics. Retail sales on Thursday, it will be producer price index, which also might be important, especially for the gold market. So just see what will happen. Depending on the patterns will be formed, we will take the position, and just guide you with this process in our daily videos.